come out because it's got to be better. And if I don't like that forecast, I'll switch the company that I'm looking at. But we actually, believe it or not, we weren't as it was a scorcher in southern Illinois this week. I mean, it was miserable, but it wasn't quite as bad as maybe what we had anticipated it to be 5 days ago. And we got some nights in the 50s, I think, coming up over the weekend. And they put 60% chance of rain in tomorrow morning, which we're not hurting for moisture here. But, you know, we will be. We're not in those great heavy soils of central Illinois. We're down here in the south, and we can go from abundance of moisture to drought in 7 to 10 days.
Yeah, you got a lot more clay than we have up here. For us, it was hot yesterday. Night before last, we got some nice rain. Fairly cool yesterday. Only got up to 80. After that, that was pretty much for the next at least 14 days. The only rain, and the last time we won't have a high that's at least 92 degrees, if not 102 degrees. With evening temperatures, the lows are running above 70. So we are entering the edge of trouble for any dry land. I haven't looked at Des Moines and Iowa City's forecast. I have to assume they're about the same, just a little bit later, maybe a day. So east or west of me, it's not a problem. Most of the stuff's irrigated, and you'll be okay. It's that stuff heading towards Bob Haney's house and towards the Mississippi River where you have a problem. I mean, we'll be okay out here, you know, buy your new pickup truck stock because you're going to have high prices and good crops, so the trucks will be moving good, but everything else going the other way, I'm a little worried.
Yeah. So I think that Richard is from Iowa. He's one of our listeners. Christy, we tried this before. There's no way you can him, is there?
Pardon?
Is there any way you can unmute one of our listeners or attendees? I don't know if Richard's listening, but I know I think he's from Iowa. He's on here, and you can unmute him. I just kind of like to hear what he's seeing up in Iowa right now. We got some virtual crop tour pictures from southeastern Iowa. Pretty good. They were down around Mount Pleasant, and those folks up there. Now, last year, if you took Highway 61 from St. Louis and you went up along the Mississippi into Iowa, there was some rough stuff where they'd had too much, had some water damage early on and just couldn't really ever get things replanted in a lot of holes. But I think that area looks a whole lot better this year. I was just seeing up in the central part of Iowa.
Richard, you have been unmuted, but that's only if you have the ability to speak how you're listening.
Yeah, can you hear me now?
Yep.
Yeah.
Okay, good. Yeah, I was looking at my computer here. I wasn't sure if you're talking about weather conditions or what.
Mm-hmm.
Yeah.
Yeah, we had about 1 4/10 inches here night before last, and we're just southeast of Waterloo, about 11 miles, so between Waterloo and Cedar Rapids. And there are places here where the farmers would like it to stop raining so they can finish getting their beans sprayed. And I don't know, you get back onto the south, I don't know how much moisture they've had, but the crops couldn't look any better really for this time of year here at this point.
Hard to pass up any June rains in Iowa, isn't it? I know it probably created a little bit of an inconvenience, but wow. I've heard the same thing. I was talking to, Bob Haney's name was mentioned earlier, and he had looked at a drought map, and I think early on maybe had seen a little bit of dry area where he farms down, if I'm not mistaken. I think that's around Albia. I may not be pronouncing that right, but I think it's down around Albia, Iowa. And yeah, he said there's no drought down there. He said conditions are pretty good, so that's a good thing.
Oh yeah. Yeah, it's going to be hot this next week or 10 days, the way it looks. I guess by the time we get to the June 30th report, we'll see how they interpret that.
It's going to be interesting. On that note, we've had some internal meetings, and got to be kind of careful what we share as specifics. But in general, it sounds like prevent plant across the country. So, we're not really looking at things in one state, but across the country, it looks like it's pretty normal. So it would appear that those wet areas, specifically the Dakotas, northwest Minnesota's growing area, they worked their tails off to get a crop planted. It might not have been the crop they intended to plant, but it looks like a lot of those acres are going to get planted. I know down here, farmers take one look at the commodity prices. They look at prevent plant. Our late plant date down here is June 5th on corn, and
Sure.
they take a look at that. And they went with beans, a fully insured bean crop rather than prevent plant corn. And I think that most of the folks, with the exception of the ones that just don't have the growing season, opted to plant a crop. So it'd be interesting to see what the June 30th report brings. Christy, I'm going to be in Argentina right up until the 29th. Help me look at, I don't have a calendar in front of me. What day of the week is June 30th this year? Is that on a...
June?
That's on a Thursday.
Okay.
Yeah, that's 2 weeks from today.
Yep.
From today, yeah. So we got Mike Toohill joined us here, and Mike, we had a little weather discussion. Richard from up in around Waterloo, Iowa, gave us an update up there, and it was kind of a almost too much water, but 2 thumbs up on crop appearance. You're not too far straight east. Now you've had a little bit different spring than probably he has. You guys have had a lot of hurdles to jump over, but your picture in the virtual crop tour this week looks pretty solid. Cornfield, you still feeling pretty confident? Think you're muted.
There we go. How is that, Brooks? Better?
Yeah, I gotcha.
Yeah, our crops look fantastic, Brooks, but need some water. I think Champagne's at 2/10 for the month of June, and our farm about 1 inch for June. So crops look really good, great color, but growth will really slow next week if we start to grow more. So.
Yeah.
No disaster, got good dirt, probably still do 200 bushels without water, but going to need some rain soon.
Yeah. Well, Christy, I know we've got minutes before we officially start, but we kind of already started at the same time. Today, help me out with the order of events. I know that we got 3 main topics. One is the weather. We want to make sure that Mike talks about this weather. I thought he was crazy earlier in the week. He was telling me that this was, could be beneficial. I drove around last night, and Mike, I'm amazed at the growth in the corn over the last 48 hours. And I am also amazed. I have, this is a side note, probably not real important for the marketing meeting, but we did extensive cover cropping this year. And we used a cereal rye primarily as our cover crop, and we use liquid on our planters. So we go in furrow. We also 32 behind the closing wheel, 2 inches off, and it was a bear. We planted into it green. We tried to spray the same day. You really couldn't see your lower unit. So if you had a hose that was disconnected by a cover crop that might have snagged it, you find out whenever you leave the field. Side dressing over Friday, Saturday, Sunday was the first 40 acres was an adventure. Things were going so smooth this spring that we planted some corn on corn in a cover crop. So we're planting the heavy residue stalks from last year with the cover crop. And I was, worried we were going to have the stands. We went to side dress that. We had a lot of it. It wanted to ball up on us. It took a lot of time to get that 40-acre field done. But we haven't had rain for a good while, and we've had degrees, 99-ish the last few days. I was shocked when I pulled back that straw on the ground, that rye straw. I was shocked that there was moisture on the surface. So I may be singing a different tune on the cover crop here in another days. And compared to some other stuff where we didn't have cover crop on this year, we had one field we did not. There is a noticeable difference to where you can find that moisture in the ground. So we know we're talking weather. Sterling, you've probably got a couple of hot issues to talk about this week, don't you?
Yeah. Christy, if you could throw me the ball here, and we'll go ahead. Brooks, it's actually still 5-9. You want me to go ahead and go?
No, I was just kind of setting up the. I was just setting.
Yeah,
players.
I'm watching. We have a yield curve inversion. Woohoo! 5s against 10s, 5s against 30s. That signals recession. Interest rates are spiraling higher as I speak, and the stock market is making new lows for the year.
Hank Williams Jr. wrote a song about that in the late 80s or early 90s. I think it's called "The Country Boy Can't Survive."
Can't survive.
If we've got some music, walk-up music, if you're a boxer or wrestler going to the ring today, that would definitely be your walk-up song.
Yeah, it's not going to be "Happy Days Are Here Again," but remember, the whole purpose behind this is to buy stuff cheap and sell it high. So we're not there yet, but we're going to get to a point. I think about 3,100 on the S&Ps, 3,200. We can start thinking about buying it depending on how the economy looks. If we're falling into a bigger recession, it's 2,800. My guess is we will get here by the midterm elections, which aren't going to be much fun for certain members of the political class. This is going to put interest rates at probably where the natural market is, 4.5%, 5%. Everyone said that old 60-40 portfolio layout that people do is just a basic portfolio. I don't know if I can get 4.5% or 5% on municipal junk bonds, and I'm looking at an S&P at 3,000. That 60-40 looks awfully good. Or maybe you do a third growth, a third dividends, and a third in munis, because at that point the economy is going to be so beat up, the Fed will have to stop. We may get inflation, that may be part of it. But the Fed is going to have to stop pounding on the rest of the markets because the government isn't going to be able to borrow. So that's what I see playing out here.
Kind of sets the stage for a much slower growth pattern when things do turn around. I mean, I think it's kind of the one that's fly shy mentality of this thing is, I think some people are really going to take heed to what's happening here. And the thing about it is, this is an odd deal. I mean, we've seen these things before, but we saw this unfolding over a period of months. This is what's bizarre about this to me. I'm never ahead of the curve on these things, but whenever we have these programs over the last 3 years, just piling money from the federal government into really into businesses. I mean, the PPP in my area in rural Illinois, businesses did very, very well with the PPP, and we really hadn't lost that much business. So you see that money out. You know that you're going to pay that back at some point in time. We were sitting here, given every clue about recession. That's what makes this thing seem so strange to me. Is normally when we strip these things out and we think we know what's coming, we don't. But it certainly looks like a recession is right around the corner. Would you agree with that?
I think actually we're in a stealth recession right now. It may not be this overreaching thing like we saw in 2008, but instead you're going to have pockets of recessionary behavior across certain businesses. For example, if you try to look at buying an airline ticket right now, or you try and book a trip, prices are through the roof. Guess what? When we get past the summer and people have already paid for the stuff they're doing now, they may not be back. So you're going to have a problem there. What made this different from the 2008 business, or even going back to the bear market of the dot-com bust, this time we got inflation. The last time when we went through this in 2008, we burned a lot of money. When they came in and added money back into the money supply, they were just replacing what got destroyed in the credit default swaps and everything else. They didn't really add to the money supply, they stabilized it. This time, if you look at that chart of money supply, it went parabolic. And inflation is always a monetary thing. Price is just simply a function of the currency. It doesn't matter if you're paying in euros, dollars, or yen. So you have all these extra dollars chasing the same amount of items. That creates inflation. And that's the difference here. And the Fed has to jack rates and engage in quantitative tightening to get things back under control. The real question is, how long are they going to do it, and how quickly will the pain really start to show into the economy? My guess is when we get past Labor Day, it's going to smell bad. You're going to have food inflation. That ain't going away. Gas prices, they might be a little cheaper, but guess what? They're still going to stink. And that's where you're going to have the problem.
We've got, so today, you can tell Sterling's got a lot to cover. So Mike's going to hit weather. I believe he's going to do that first, right, Christy? And then Sterling's going to talk about this economy. I think it's going to be really important. I wish my kids could listen to this. I think 2 years ago when, kids are at a certain age, they watch the headlines and they can become worried about something. And all of a sudden they're seeing, oh, well, the government's going to supply the consumer with money to get through this. Or we're seeing the backlash of that today. Great learning experience, not for just us, but, for those age kids to see this. And then I'm going to talk about two things at the end, and I'm going to keep my comments brief. I'm going to talk about energy prices' role in inflation, energy prices' effect on the commodities that most of us are looking at, okay? The last thing I'm going to talk about is with the 100-degree heat across the U.S., the farmer has absolutely gone into neutral in regards to hedging. And Richard mentioned the Iowa weather here before a lot of people joined. It's great. The crop looks good. I would almost bet most farmers aren't selling. They're seeing the headlines. They're feeling the heat. I'm going to talk to you about maybe a flaw in that line of thinking. And I'm not suggesting that we go out and make sales. But I am suggesting that we do take some action because we are substantially higher than our projected pricing period that we have through most of our revenue protection policies out there. So as we invest money in the crop, we're going to talk about why it might be a good deal to have the right but not the obligation to sell some of these prices. So I'm going to talk about that at the end. I won't take long, Christy, because I think weather and the general market in general take precedent over what I've got to say. So I really want to turn it over to these guys and kick things off. So with that, we're pretty close. We're actually over 9 o'clock. Do you want to officially kick us off, Christy, and get this party started?
Absolutely. Well, welcome. Thank you for joining us today. This is the ASNA Edge marketing team. We want to welcome you. We do have with us Brooks York, who is our Director of Producer Services, and we have Sterling Smith, who is our Director of Ag Research, and Mike Toohill, who is our Corporate Agronomist. And so without further ado, because it is after 9 o'clock, we do want to get started. And I believe we are starting with Sterling today. Is that correct?
No, we're starting with Mike.
We are going to start with Mike.
Oh.
We're going to go right into weather and let Mike take the ball and get his screen going, and we'll just get right to it.
All right, we good to go, Christy? See my slides, it looks like?
Yep, we see you.
All right, good to go. Let me get this where I want it here. Okay. Again, my name is Mike Toohill, live over in Bloomington, Illinois. Got a lot to talk about today. We're going to kind of look at the current heat wave, which is kind of subsiding a little bit today, unless you live in the southern Corn Belt. And we're going to talk about heat wave number 2, which is coming in, starting in Nebraska, working its way through the Corn Belt next week. We're going to talk about how this heat is affecting our crops, both good and bad today. Hang on here, Christy. Looks like I locked up. Just 1 second here. There we go. We're going to talk about heat wave number 1. This is this morning's NOAA cover page snip. And what we're showing on the map here, all of these colors kind of an orange color, that is heat wave number 1 kind of settling its way south. And we've got lots of heat through Missouri, central Illinois, Indiana, working us all the way down here to the Delta. And I talked about heat wave number 2. That's number 2. Those are excessive heat watches for Nebraska. That will be the heat wave for next week, and that is expected to spread through most of the central and eastern corn belt. So again, heat wave number 1 is kind of doing its thing, working its way south, still a problem for the southern growers. And heat wave number 2 looks to fill in through the Midwest for next week. We're going to talk about the heat impacts from the first heat wave. I think the damage the first heat wave did, that would be that small percentage of crops in the Delta and the South that are pollinating right now. And the most affected would be the corn crop, although some soybeans could also be affected if they were starting to flower and set a few pods. So again, for the most part, the major impact from heat wave number 1 would be our crops in the South and the Delta that are flowering and pollinating. I got a question for you up here on the screen. Were the hot days, the hot nights, the most damaging in areas with reproducing crops? And in my opinion, we had pretty good humidity, and the humidity remains this week. So I think we've had enough humidity. So I think the crops did pretty good on the high side of the days. But what really gets corn yields, when you get a bunch of warm nights in a row, say 75, 80 degrees, you start stringing 3, 4, 5, 6 warm nights in a row. And the problem with our yield is those plants don't get a chance to rest at night. And as a result, that plant is struggling during the day to collect sunshine. It's trying to fill that ear, and a lot of those sugars go into cooling the plant rather than filling. So again, most of the effects of this week's heat wave were on that small percentage of that South and the Delta crop that was pollinating. I do have a lot of good news associated with the timing of this week's heat wave. With the late planting season, very little of the Midwest and the major corn belt crop is in critical stages that are impacted by heat as of this week. So that is a plus. So again, the crops are small, not using as much water, not in the reproductive stage. So again, I think for the most part, this heat was a positive. We're going to kind of break down where that U.S. crop is by planting date. These are the top 18 states according to NASS. Just 7% of that U.S. crop was planted prior to April 24th. Most of that would be North Carolina, Texas. We start working into more of the Midwest crops. We just planted 7% from April 25th to May 1st. And I'll show you some slides of some April 29th corn on our farm here just in a little bit, where that corn is at in the Corn Belt. May 2nd to the 8th, we got another 8% in the ground. And if you look at that chart, I've got May 9th to the 15th and May 16th to 22nd highlighted. 50% of the U.S. corn crop went in the ground in those 2 weeks. And we have a big chunk of corn planted in that window on our farm too. And I'll show you where that corn is at as of today. And we also have more corn in late May and into June. So looking at the whole picture, 75% of the U.S. corn crop was planted after May 9th. So again, that corn is a long way from pollination time, so that heat not going to be affecting that crop to a great degree.
Mike?
Yes.
Awesome slide. If you can send that to me, I would really appreciate it. I think that has had some bearing in what Sterling and I are going to present here the next month. I'm assuming, and if I know this is probably going to be the case, are you going to follow that slide up with some key pollination areas in your presentation today, or times in your presentation today?
I sure am. That'll be my final slide, kind of guessing where the vast of that corn crop will be pollinating. Yep. Here's some of that pretty corn on our farm in McLean County, Illinois, right in the heart of the Corn Belt. My brother planted that field on April 29th. So that would be one of the earlier planted fields throughout the Midwest. That corn is currently at V12. It was V11 a couple days ago, but it's growing pretty rapidly. I've got my pollination estimate on that field as of July 8th, which is kind of late for our farm. If we could happen to get a good soaker on that field, we move that up to maybe potentially as early as July 4th. But right now that corn is starting to roll. It's going to roll most of the next week, so we're probably going to have to push that date back a little bit. That corn is around waist high. So again, corn looks beautiful, good stands, good color, plenty of nitrogen, but it is rooting down for water, but water is at a short premium. My brother already texted me this morning. He's less than an inch of rain in the last month, and he's getting a little bit. There is good dirt under that cornfield. This is more of that big window. We talked about 50% of that corn in the Midwest Corn Belt being planted in mid-May, and that's a May 10th field on our farm in McLean County, Illinois. If you look at my tile spade, it's about halfway up the tile spade, so probably 2 foot tall corn. B10, my current pollination estimate on that is July 12th. If it gets hot and crunchy next week, we're probably going to have to push that back. So again, even in McLean County, somewhat earlier planting date, looking at early to mid-July to get most of that corn pollinated. One plus for this week's heat was looking at the drought map. It's really not that threatening as of this morning. That's this morning's update. Most vegetative cornfields had plenty of subsoil moisture to grow through heat wave number 1. But looking at that map, we'll talk about that as I get ready to close here today. Kind of watch that yellow coming through Illinois. Also, some of that yellow maybe coming through Kentucky, Tennessee, the deeper south. That's going to be that flash drought that could potentially come up and catch some of that corn as it pollinates if we don't get some more rain. So again, this morning's drought map, not that threatening as of today, but I think that's going to change by next week. This is something I always say about corn, and this is the case for most of central Illinois, despite being dry. If it's not rolling, it's still growing. A lot of corn didn't start to roll till a couple days ago, so we were able to grow through the middle part of that heat. So when you have good soil moisture, corn's not rolling, you're able to pick up some bonus growing degree days. The corn formula, growing degree calculations maxed out at 86 degrees, but if your corn is still having open leaves at 91, 92, 93, 94, you're actually catching up to some degree. And one more plus for this week's dry weather, that hot weather, especially being a little bit dry, is pushing those roots down to find water. So overall, the vast majority of the U.S. corn crop, I think, had a pretty good week this week despite the heat. But here's what I think is going to be seeing more of for next week. If you happen to be listening today or looking at this a little later, if you're in a drier area, your corn is rolling, it isn't catching up, and it might be falling behind, especially if it rolls up early in the morning and stays rolled into the evening. We did not see much rolling this week until late here, at least in my part of the world. I expect to see a lot more corn rolling pictures on social media next week because on some of those fields with lighter soil types, we're able to grow through the heat. A lot of that subsoil moisture will be getting a little more compromised. Another plus with our current state of development, we talked about the corn on our farm. We're 10 leaf on the mid-May corn. We're 12 leaf on the late April corn. Our daily water use requirements are ramping up the chart here. So again, heat wave number 1, water use is about 2/10 on a lot of that corn. Heat wave number 2, we're going to be over 3/10 to 1/3 of an inch. So water use will increase with heat wave number 2. Now we're going to talk about the bean crop a little bit. A lot of talk about early planting beans the last 3 or 4 years, but this year Mother Nature did not allow for many early planted beans. This is our top 18 states according to U.S.A. NASS. Just 3% were planted prior to April 24th, 5% between April 25th, May 1st, and 4% between May 2nd and May 8th. Only 12% of the U.S. bean crop was planted prior to May 8th, so very few beans in the U.S. were also flowering this week. So again, that's a good thing for the bean crop to be able to grow through the heat. And looking at the big bean planted window, it's a little more widespread, 18% May 9th to the 15th, 20% May 16th to the 22nd, and 16% from the 23rd to the 29th. So again, most of the bean crop went in late. That's a good thing as far as watching some of this heat. That's what the beans look like in our backyard. That's not one of my brother's fields. That's a neighbor's field. That's an April 27th planted field. Those are 15-inch rows. And as a high yield bean guy, I always talk about on the summer solstice, which is June 21st this year, I want those beans 100% canopied. I want them flowering. I'm wanting setting pods. And that's just not going to be the case. Even that April 27th planted field's got a lot of sunlight hitting the ground. And one thing we're seeing with the soybean crop the last couple of days, growth has slowed as well.
Mike, I want to stop you right there because I've got an agronomy that it baffles me. Okay, last year, if I think we could move up soybean planting across the country probably as much as 3 weeks on average, and they sat there and they sat there and they sat there and they did not grow. We had those cool temperatures and it was a little bit wet and they didn't grow. They weren't canopied last year on June 21st, but we still had some pretty good yields on soybeans across the country. Is that one of these rules that you're seeing kind of go away with early planting, or is there any correlation between the early planting, late planting, and the canopied? Because it did seem, it's hard to argue with the early planted bean theory now. Even though they weren't canopied last year, they did really well. Any comments about that?
I think they did really well last year, Brooks, but I think to get those 80s, 90s to 100s like we saw back 2 to 3 years ago, which are pretty common, it required early planting, early canopy, and early flower, early pod set. So again, I think the beans are good last year. But to really get those superstar yields, the bin busting bean yields, I don't think we're going to have that type of year again this year. We just had too much slow growth here the last couple of years on these soybeans. So again, that's the early looking beans. Here's what most of the beans in the Midwest look like today. That's a May 13th planted field on our farm. My brother's in 30-inch rows, and as you can see, a lot of sunlight hitting the ground on those beans. No reason that field still couldn't make 60 to 70, Brooks. I just don't think there's any chance that it can go 80 to 90 plus. There's just, again, way too much sunlight hitting the ground. There's no flowers on those beans. There's no pods. And one thing, too, is you get into the heat wave number 2, that's going to be a pretty hot environment for next week. Think of all that sunlight hitting the ground. It's like the sunlight hitting the concrete. Those beans should be canopied. They're not, and not conducive to super high yields, although we can get some good weather and still grow some very good beans. I'm going to talk about heat wave number 2. That is the snip of the Weather Channel forecast for Bloomington, Illinois. We got one more day of 95. I'm going to try to get a run over the noon hour. That'll be about a 3-pound run today. But we cooled off a little bit for the weekend. Actually got a nice day to run on Saturday. But starting by Monday, we're up to 93, 98 Tuesday, 92 on Wednesday, 94 Friday. And looking at the Weather Channel outlook anyway, corn and soybeans will not get a break over the next 15 days. There's not a day in the 80s after this weekend. So again, heat wave number 1, probably a good thing. Heat wave number 2 is going to give us a few more issues. Is there much rain to kind of help us out? Our farm is right here in this white spot, which shows no rain over the next 7 days. And looking at that map, very dry throughout the ice states. Brooks' area is going to get pretty dry. And really, there's not many rains over a half inch anywhere in the Corn Belt. And that's going to kind of overlap with dry weather. 6 to 10-day outlook's not real favorable for the Midwest. This is our temperatures over here. Heat dome is kind of settling over Arkansas, the heat of the heat, but it goes all the way up into the Dakotas. Probably a good thing for the Dakotas to get some heat on these late planted crops. And we've also got a combination of hot and dry in the 6 to 10-day. Not much relief in the 8 to 14-day map either. We still got a lot of issues here with heat in the south, working its way through the Dakotas. Again, probably good for the Dakotas. And most of the dry weather is kind of settled on the central and eastern belts. Where are we going to see the most stress?
A lot of times.
Brooks talked about his farm already down here in how good it looks in his part of Illinois, Indiana. This is my 30-day rainfall map compared to average. And one thing you can see is we're starting to get some areas in southern Illinois where we're running 25 to 50% of average rainfall over the last 30 days. I think southern Illinois is going to be showing a flash drought combination of not much rain in the last 30 days, soils that don't hold as much water, and also we're going to have some hot weather. So again, I think southern Illinois is really going to run into a flash drought here next week, potentially parts of Indiana. Real good soils up here in northwest Iowa. I'm not worried about northwest Iowa. I'm also worried about southeast Iowa and the clays. And no one's really talking about Minnesota. It was a late planted crop. There's some awful good soils in southern Minnesota, but up here in central northern Minnesota, soils aren't as good. Potentially could have some flash drought potentials there too if the weather maps come to fruition. And my last slide here today before I talk about pollination date, this is our change map as of this morning. Again, the U.S. Drought Monitor, not that threatening, but I'm seeing a lot of yellow. That is a class 1 degradation of the drought map. Most of Illinois is starting to yellow up, also down here through parts of Indiana, Kentucky, Missouri, Tennessee, parts of the Delta through Mississippi. So again, I think for next week, we're going to show a pretty significant flash drought in the southern Illinois, Missouri, Tennessee, Kentucky areas. And again, that crop is further along, going to be hitting more heat. So that's going to be the area to watch for next week. And my last slide here today, Brooks talked about my pollination field. Pollination is later this year, mainly based on planting date. We've actually had pretty good heat throughout once this corn was planted. But going back to my brother's field that was planted on May 10th, that corn's only 5 weeks old. I moved my pollination dates up slightly this week because of the good growth. I moved them up to between July 5th to the 15th for the vast majority of that U.S. corn crop pollinating. If we roll a lot next week, we're probably going to have to push those dates back potentially to July 10th to the 20th. And again, average temperatures maximize in most of the Midwest locations in mid-July. Doesn't mean it has to be hotter in mid-July versus when corn pollinates the 1st of July, but that is a historic that we do have more heat in mid-July versus early July. And one thing too, for the market, the pollination window is going to be very tight this year. We've talked about this a couple times, but 50% of that U.S. corn crop went in the ground between May 9th and the 22nd. Most of that corn is going to pollinate somewhere between the 10th and the 20th, and that's going to be a very tight window. So that's all I have here today. I think heat wave number 1, a general plus. I'm a little more concerned about heat wave number 2, and we'll see what transpires. It's going to be a pretty interesting weather market. Normally, the traders like Sterling and Brooks have a good feel for the crop by July 4th. I think this year is probably going to be July 15th till they really have a good feel on how good their corn is.
Mike, I do have a question for you. I'm sorry, Brooke. Let me ask you real quick. We did have a question. Just some thoughts about double crop beans that might just now be planted. It's going to be hot next week. What do you think about that?
Yeah, Christy, that's going to be a good conversation, especially as you start working through Kansas, working through Southern Illinois where more wheat's coming off. I think the growers will go ahead and attempt to put those soybeans in the ground and hope for rain. But again, it's going to be pretty hard to get soybeans established. We already talked about the benefits of getting those beans up and growing, and that applies to soybeans whether you plant them in April or plant them in July. So it's going to be hard to get enough moisture to get those soybeans established unless we get some soaking rain. So that could be a definite concern.
Sorry, Brooks. I know you were wanting to say something.
I can offer just kind of a little bit of insight from the virtual crop tour. We're working pretty hard on getting it put out this week. Christy's had a busy week, and so have I, and so we're kind of putting it all together today. And it does appear, I mean, we've had a few little events. We had some hail out in Kansas and Nebraska, and you get those pictures of those fields that are affected. And you don't want to take anything away from those folks because it's bad where that happened, but everybody's quick to mention that a lot of the neighboring crops benefited from the heavy rains more than the damage was. And even with the pictures I'm getting from this 100-degree heat, you see some corn rolled up, but there seems to be more talk, Mike, about the growth that was experienced this week. And it's like you said, maybe some, hey, you hate to say this out loud, maybe some more positives from this wave number 1 and even some of the big rain events we saw in Kansas and Nebraska than negatives. So I have to tell myself that continually. I find myself looking at the forecast about every hour to see if we've got some relief in sight. So maybe a good thing.
Yeah, I think your analysis, heat wave number 1 was perfect, Brooks. But again, I'm really getting a little more concerned in the back of my mind about heat wave number 2. I know we've got pretty good dirt here in Illinois, but we really need to grow 250 bushel corn in central Illinois, not 190 to 200. And a month of dry weather, again, won't be a disaster here, but it's going to take some definite top end off. And really concerned about Southern Illinois, Brooks. I remember back in 2012, that Southern Illinois crop looked beautiful until it did flat. And we just run out of water. So I'm hoping we get some nice rains to fill out that southern belt. But heat wave number 2 is going to be pretty devastating if we don't get water to go with the heat.
Well, you know, we're switching over, and we're in a critical period, June, July, high volatility due to weather and markets, and it's going to be no different this year. But Sterling's with us today, and you know, probably the only time I've experienced this that geopolitics, whether that's Ukraine or China, combined with an overall economic atmosphere, might actually trump weather in regards to what commodities could potentially do over the next 60 days. That's odd to say, and it may still be a stretch because weather and the U.S. crop's awfully important. But Sterling, you've got some things to talk about today that aren't necessarily directly related to the crop, but set an economic background for what we're experiencing. And we're ending things with Mike on somewhat of a positive note. Something tells me we're going to transition to something fairly negative over the next few minutes. So we're going to let you be the purveyor of that great information.
Okay, let's make sure I'm sharing. Can everyone see my screen?
It's that gray screen right now, Sterling.
Okay, let's try stop sharing here, and let's try this again here.
It's gray again.
Yeah, let's try this one more time here. Let's go ahead and click on share. Let's try that. How's that?
That'd be perfect.
There we go. So What I'm going to say here, a lot of people are going to view this as being rather negative. It all depends on where you sit. When they put gasoline on sale at the store, when they put soda pop, when they put steaks on sale, everybody's happy. When you put stocks and bonds on sale, everyone gets mad. If you think about it, it doesn't make a lot of sense. But that's how the world perceives things. We have a problem in this country, and actually it's a global problem, and that problem is inflation. And inflation at its very base is too much money chasing too few goods. Inflation is entirely a monetary phenomena, and it is different from than price appreciation. Price appreciation is you buy a house in a given metropolitan area, and within your 6-block radius, because they built a new grade school, your house value goes up $15,000. When the house value in every part of town goes up $15,000, regardless of what happens, that's inflation. And right now we're experiencing the latter of those two. This chart is a chart of the M2 money supply. This is how much money we have floating around in the United States in dollars. And this stretches all the way back to 1960. Now, there's a couple of things that we want to look at here specifically. First of all, you see this little tiny blip up right here, right there. Can you see that? Mm-hmm. That is the great financial crisis of 2008. That is when the Fed came in here and sprayed liquidity into the market. What happened? We had credit default swaps blow up. We had big banks like Lehman Brothers, Citibank. A lot of these people, a lot of money went to money heaven, meaning these assets were marked at a certain price, they were lent out, and it all caved in. So the Fed had to come in here and add liquidity, and they added a lot of it to keep the money supply stable, because what is difficult to deal with is a declining money supply. That is something that creates deflation. So when we fought the great financial crisis, it moved up this little tiny bit, and the Fed maintained an easy monetary policy really entirely through the entire Obama administration and through the entire Trump administration. Now, as you can see right here where I'm pointing, this is the pandemic. And as you can see, we had basically 15 trillion, or I guess, however, we had 15, this is 15,000 billion. The money supply jumped all the way up here to 21.728. So we increased the money supply, well, not quite 50%, but well over 40%. So all of this money is stirring around the system, and it's creating inflation. That's in part why crude oil prices can move up so easily, regardless of production, why gasoline prices go up, why food prices go up. Inflation is like electricity. It follows the path of least resistance, meaning the places it's most easy to show up, it will. It's not because Chevron's out to get you or because Hershey's out to get you. That's wrong. That's just how the economics of the situation work. And this has been true time and time again. Whenever we had any sort of inflationary situation, it shows up in consumer goods first because they're the most common. It's the path of least resistance. So what the Fed is embarking on is a policy to soak up all this extra money and try to get the monetary level back down. I'm going to guess they're probably going to need to soak off about $5 trillion of liquidity here. So we look at this chart, and you can see just in an ever so tiny, from month over month there, it went down just a tiny, tiny bit. And I'll show you the exact number here. We went from 21,809 to 21,728. So basically, we went back to where we were in February with the money supply. The Fed is going to continue to do this until the inflation stops. Along with this, they raise interest rates. So what we have going on right now is the economy going through change. And what I'm showing you here, this is a 5-year interest rate. So if you want to lend money to the government for 5 years, they're going to pay you 3.45%. Now, if you move on here to the 10-year, they're only going to pay you 3.38. If we move here to the 30-year, they're going to pay you 3.42. This is called a yield curve inversion. When you begin to see lower interest, shorter term money paying you more than longer term money, that is indicative of a recession. These happen occasionally from time to time, but when they start happening consistently, they become more predictive. Now, the GDP numbers that came out the last time showed negative growth. The definition of a recession is 2 negative GDPs in a row. The next batch of new numbers will be coming out in September, looking back towards June. So most likely we are probably in some degree of a recession right now. I think it's going to be more of a stealth stag recession sort of situation where some parts of this inflation is not going to go away. Food price inflation is going to be around for a while. Energy prices are going to stay elevated. The price of money is going to go up. So that is creating this volatile and rather uncomfortable pot that, until it finally bottoms out, is going to make things very uncomfortable for a lot of things, particularly the stock market. So we're going to look at the S&P 500 right here. And this is our little panic during the pandemic here when stock prices dropped. Oh, how much did we drop during the pandemic? It was, let's see here, percent change. During the pandemic, stock prices dropped, we fell about 35%. The thing was the rate of change. We did it in less than a month. That tends to get people's undivided attention. Right now, the S&P is down from the highs, percent change. We are down, wrong, yeah. Let's see, annotate, percent change. Right now, we're down about 23%. But what's interesting is, notice right here, we dropped about 10% in 3 days, which is unusual volatility that the market is trying to adjust. And it's difficult because it's not getting clean data, because we still have supply chain interruptions and everything else that's distorting what's actually going on. But things we do know, Chair Powell was quite clear when he raised interest rates 75 basis points yesterday, is that he means business, and he is going to do what it takes to cut inflation. Along with this, we're going to have to absorb the money. So we're facing two problems that normally are supportive to the markets are right now negative to the markets. So when are we going to make a bottom? That's everyone's question. When can I go buy stocks? When will my 401k start shrinking and start growing again? Well, nobody knows exactly where the bottom is, but you can get some pretty good ideas when it's not a bottom. So this is a chart of the VIX. This measures fear and panic. This is the great financial crisis of 2008. We had a high of 89.53. This was the pandemic. We had a high of 88.36. This was the dot-com bubble right in here where we had highs around 50. These are various assorted corrections that we've had that were more routine, and the VIX got to 50. Right now it's at 32.02, which the average is about 19. So we are in the nervous phase here, but in no way have we seen anything that begins to look like panic selling in the stock market. Why this matters, when we have these risk-off days and things, that can affect commodities. And if we see a deep sell-off, very often we see a stronger dollar, which is bad news for commodities. And people, when they pull assets, very often if you're a big hedge fund, you sell everything that isn't glued down, including the computer and maybe even the trader. So it's a little bit, it all can kind of hinge on this. So this is why we need to pay attention to this, because this could potentially, create a sandbag for prices. Now, I'm not horribly bullish on the grain market, but I'm not terribly bearish either. I think when we see corn, and right now July corn's at $7.80 I think when we see corn prices move up and they get above $8, we experience another kind of inflation. Inflation just isn't prices going up. It can also mean the quantity that you get shrinks, shrinkflation. Meaning, let's think about a candy bar on a store shelf. Okay, Hershey's needs to sell those candy bars. Mars needs to sell those candy bars. So they're there. If the price of the components and moving that candy bar means that candy bar has to be sold at $2.50 for a 12-ounce candy bar, okay, that may be a problem because they know they have a problem selling it over $2.50. But if they can put a 10-ounce candy bar there and sell it for $1.99, guess what? The average consumer is going to reach in there and buy that shrunken candy bar, still facing inflation, but you don't feel it in the pocketbook. You just get smaller amounts of everything. And that is, I think, how, if we have some crop difficulties here, we're going to have supported grain prices. We know our ending stocks numbers aren't there to send, prices down that much. But if we have a problem, we're right at that point to where we're going to grind and we're going to see demand destruction. It's going to certainly move through the protein market, and we're already beginning to see that. Cattle are a little lower today, but we know we're going to see lighter animals going to weight, and eventually that's going to result in higher meat prices, higher egg prices. All those components are going to be there. So we have to be careful in here that when we get a bump, when we get a bounce, and I think Brooks is going to talk about this, about maybe looking at getting some protection in here to take advantage of what the market's going to be giving us, because most likely we're going to be good again for this harvest. The next year is a whole different kettle of fish. We also need to think about those input costs because we're still elevated. And yes, natural gas had its worst day since 2007, 2 days ago when it dropped 15%. Guess what? It's almost back up to 8, and it's twice where it was when it was causing problems last year. So again, nimble, head on a swivel, and pay attention to what's going on, and you can take advantage of some of this. Brooks, are you with us? Christy, did we have any questions?
I'm not seeing any questions. You just always blow me away. I know one of the things that you talked about, I think it was on our WASDE, you talked about the candy bar thing, and I'm still kind of mulling that over, because you'd also kind of mentioned one of the things you talked about was like the metric system, which I thought was kind of interesting.
Okay, so I'm not going to get too political here, but there were pictures of comparing two presidents on a lot of social media yesterday, one from the 70s and one currently in office. We'll just leave it at that. But there was a push to put things onto the metric system in the late 70s. And if you've ever been to Europe, the sizes of things over there, everything's obviously in the metric system because that's what they use. And the sizes of everything are a little bit different. And something that you can do, for example, if you look over and you see gas prices right now and you look in Rotterdam, they're 156. Okay, that's $1.56. That's actually a 156 euro, which we're about at parity now anyway, per liter. So it looks cheaper, but you're only getting 1/4 as much. So you're really pushing, $5, $6, $6, $7 a gallon. But that's something that I'm kind of making a friendly wager here, that maybe we start to see a push to put things back on the metric system, because suddenly, you'd have a 100-gram steak or a 200-gram steak versus a 4 and 8 ounce versus what we're used to seeing. And this changing would make it appear that you're actually getting a break in price when in fact you're just getting a little bit less. It's kind of like if you get paid every 2 weeks and then it gets switched to getting paid twice a month. Kind of looks like you got a raise. You really didn't, but it kind of looks that way. And that's something that it would not surprise me under the guise of, well, we can reduce inflation if we switch to the metric system. It wouldn't surprise me to see a move like that happening if they cannot get this inflation under control. And that's really the next question. Is this inflation going to be sticky? We still have a labor shortage. So what happens is people get raises. They don't get a big enough raise, but the guy down the street doing the same job's paying more. You start to see a lot of turnover in employment as people chase higher wages. When that happens, that keeps inflation fueled. The Fed doesn't want to come out and say this, well, we want to cause unemployment, because that's what they want to do. At the end of the day, that's one of the things they want to do. But you come out and say that, that's not a terribly popular political thing to say. So they're stuck in this spot, and the only tool they have is to raise the cost of money and top money up. That's the only real tool they have to control inflation, but that is what has caused most of this inflation. So it'll be very interesting to see how we get through the summer, whether we see inflation and see it back off globally. We've seen little pieces of it at times, but again, inflation can be a lot like whack-a-mole. It pops up here, you whack it. Well, guess what? It pops up here, you whack it again. That's the problem with inflation, is it can be a little stealthy, and I think you're going to see it kind of flow through the economy until things get back to a more of a self-corrected normal, where we're going to see a stealthy recession where, okay, I think we're going to have trouble, this fall with the travel industry, used cars. If we take the S&P back down sharply here, I think all of a sudden used cars, particularly upper-end automobiles, are going to get cheaper. It's going to be different. I think pickup trucks are probably going to be dear, because I think we're going to see good grain prices probably continue unless something really definitive happens in the Ukraine, and I don't see that happening. So I think we're going to have those supply issues are not going to go away. And energy prices, probably we're experiencing a little bit of downside volatility here right now because the stock market's getting whacked over the head. But crude oil was only down 44 cents a barrel. It's not that much. Yeah, and everyone on the news is talking about unleaded prices are down to $3.88. They're down to the prices they were 5 days ago. Okay, big deal. This volatility isn't enough to show up at the pump. And as long as people need to buy gas, guess what? They're going to buy it. And that's going to push prices higher. We simply don't have the refining capacity. So it's a messy sandwich. You pay attention. There may be some things to take advantage of. One other thing, and I don't usually talk about this too much, but we're going to talk about gold and Bitcoin here a little bit. Gold prices have struggled through with all this inflation. Normally, inflation is gold's favorite food. Gold has not performed very well. We've held between $1,800 and $1,900 an ounce. I'm going to put up a chart here. I'm not getting on my soapbox about this. I don't want to set anybody off. Don't want to trigger anybody. But this is a chart of Bitcoin. And you notice it kind of had the same shape as that stock market chart here. You see that? See that? Kind of the same thing here. So looking at Bitcoin prices are dropping, and that's entering a bear market. Bitcoin served as zero hedge for inflation. This is when inflation started showing up in the economy. Bitcoin was at its high. Notice it's gone down. Shouldn't work like that. And we mix that in. While gold likes inflation, it is, above all, it really is anti-dollar. It's anti-paper money. And to a certain degree, I would think anti-computer money, too. But as you can see, the dollar index has been very, very strong. That's because our interest rates have generally been moving up faster than other places. We're actually seeing positive interest rates in Germany, in Switzerland, and other places that had been at zero to negative interest rates really since the great financial crisis. That is creating a situation where the dollar can ease a little bit vis-a-vis these other currencies. The Swiss National Bank, Swiss Central Bank, said they would intervene in the franc against the dollar to support the franc. So that's bearish for the dollar. If the dollar can come down, that will support grain prices. Seeing gold rally is actually the last big bout of inflation. Gold was the last thing to go up. And it typically is a very late in an inflation cycle item to move, because at that point, everyone's caught on, oh my God, there's this inflation, I need to buy gold. And that may be when we get a flush and we get the gold market to actually run up. And that may be, it could be 3 months away, it could be 3 years away. It just kind of depends. But when you start to see gold, really flaring and really going up, that's when you probably start wanting to get your list of good stocks to buy and be ready to buy some bonds. So that's one of the things I've had some questions about, why gold isn't moving up during with this inflation, and that's part of it is this unusual strength that we've seen in the dollar.
Just real quick, Sterling, we had a question. Just if you would repeat when that first negative GDP was, and then I think you said the next one comes out in September, but if you would verify that, I'd appreciate it.
Sure. Here, we'll just punch it right up here. Let's see, GDP here. Let's go ahead. The first one came out was about a month ago, GDP. And that's not the right one. There's about 1 million things inside the GDP number. Let me find. Let me find the right ticker here for this here. U.S. real GDP. Let's see here. Is that the one I want? That's not it either. Hold on here. Hold on here. Let's see. There's CPI, PPI, all these wonderful numbers here. Let's see. Global services, GDP annualized quarter over quarter. There's the bad boy we want. So, I'll put a chart of this. And this is the GDP number. See the last reading, and this was for quarter one, showed a negative print of 1.50. The next print for this, that will show the June number, will actually be coming out in September. So the June, we'll have the March to June quarter will be the next one that comes out. So this is always a lagging indicator. It always runs behind. So you never know what you're actually in a recession until you are. And these numbers have been a little tricky since we've had the pandemic. Import prices and things can affect this. So we are subject to some revision. But as you can see, the general trend is going from here, which this is, again, the pandemic wrecked everybody's charts for everything. You know, we had a minus 30 to a plus 30 in 2 months. So, but the general trend here is that things have been easing. And we also have to look, since inflation is not running 2 or 3%, we need to do real money calculations and things, because you could have a higher GDP output, but if it's not matching inflation, it's not real growth. So I will sort out all those numbers for you, because I, took a nerd pill when I was young and do things like that. So.
Okay, so that wasn't on our March 31st quarterly call. That was something different. That was a different.
No. This was something completely. This came out in May, and it was probably. And make sure to read the daily items, because okay. I don't just talk about the grain markets. I talk about everything that's going on. And like right now, the grain markets. Well, here, if you look at the corn market here, we'll just pop that up. Let's talk about the corn market a little bit here, since we have time. Let's look at December. This is new crop corn. Now, prices really, in the scale of life here, I mean, we had a high up here at 766. Our low was right around $7. That's not that big of a range. That's less than 10%, really, since the beginning of spring, since we've plateaued into this upper level. So that's nothing, that's really not all that volatile. That's not all that exciting of a corn market, really, as things go. As long as we continue to hold $7, I think we're good. I think if we start to get above $8, that's when all of a sudden the demand formula starts to reset and things start to get a little uncomfortable. But I think we could hold this range. We may trade and if you can get things above $8 on new crop. I think buttoning some stuff up is probably, don't button the whole thing up, but buttoning up a little bit probably makes some sense, because somewhere above $8.20 or somewhere in that area, we know we're going to break demand, and when that happens, it can get kind of messy. And how quickly we break that demand is going to. By that time, we're going to be thinking about what they're going to be growing in South America. The Ukrainian situation could be different, so we have, some moving parts here that could be a problem. The one thing on the positive side here, stocks, the S&P's Dow's now down another 800 points again today. When people sell stocks, that gets turned into money. That turns into cash. That cash can be looking for a home. And, people are always, the greed of the investor is, insatiable. The next idea might be maybe we buy commodities, and we could see some index fund buying come in here. It could push everything up a little bit and give things a little better support. That is not the most ridiculous idea that I've heard floated out there. So,
Sterling, I mean, and not to kind of balance that statement out, how much of the money that is thrown into the speculative category, especially on the long side, it can be on the short side too, how much of that is, how much would the interest rate increase along with the margin increase keep that money from going into commodities? Will they have an adverse effect of people, even though equities may not be where you want to put that money, will interest rates and margin levels, initial margin levels, will that keep some people out of this commodity market?
It will keep the daily managed money out of the market. It may keep the dentist in West Omaha out of the corn market, or may slow him down a little bit. That's not really what I'm worried about. Where I could see this here, I'm going to learn a little bit of something about the COT reports here. And I'm going to jump this over. This is a commitment of traders report, and this shows the types of people who come in here and buy. Now, we have the commercials. This, we all know, this is Cargill, this is Kellogg's, whoever has a legitimate business reason to be in here and trading enough size to fill out a report. The non-commercials are the people who are, these are speculative funds. This is Citadel in Chicago being a good example. Bridgewater in Connecticut. We have another group down here, index traders. This is when people come in and buy commodities just like you would buy an index fund in the stocks. You buy an S&P 500 fund. Here you can buy one of these various commodity indexes they have, and that hard cash goes to work. These guys are not all that margined, okay? They don't get themselves way leveraged up like these guys do. The non-commercials, they have leverage, and that can certainly inhibit their behavior and can cut into day-to-day volatility. Someone buys one of these index funds, and this could be CalPERS, this could be, a qualified investor, someone with an 8-figure net worth. They come in and buy this. They typically want to hold this for a while. They aren't going to be getting in and out every day. So what this does, if we see buying in this category, and we'll put up a chart here, their net position right here. We see buying in this category. That's kind of, it's like adding water to the pool. The pool will suddenly get a little bit bigger, a little bit higher, and a little bit taller. And as you can see right now, 2021, we actually had some very, very good inflows after a pretty dull period. And here of late, we've seen some money back out, which again, we've had generalized fund selling in the corn market, and we have, actually held up pretty well. Now, here's your great financial crisis, 2008. As you can see, everyone, get me out, get me out. Well, they do, get me back in. And we had a pretty good grain market, as I recall, from 2009 to 2010. So right now, we're going through this business right here. This probably comes down. If this reverses, this could, and the prices can stay elevated, this could, help the pool out considerably.
Good explanation. I like the get me out, get me out. We refer to that as the CMO in the grain business. It's usually a squealed at a high shrill pitch. Get me out. That's when the bottom is falling out. So, Sterling, I don't know if this is a good transition. I just wanted to and you're welcome to pick this back up after I'm done, but I think it is a good time to throw this in. 100-degree temperatures and selling grain and soybeans don't go hand to hand very good. You see farmers absolutely stop selling, and I don't blame them. I mean, it certainly. Mike talked about the heat wave number 1 maybe being beneficial, not so much in heat wave number 2 if that comes to fruition down the line. Something to keep in mind. We still probably don't do the very best job in the world of explaining what the policy that we offer supplies the farmer. There are bushels there. Here's something that scares me a little bit. I'm just going to tell you kind of from a personal standpoint. I'm going to tell you what I did in the last 24 hours to counter my fears. Okay, a great looking corn crop. And Mike can tell you, we've poured a tremendous amount of money in it. I'm almost embarrassed to say this, but with starter, with the dry fertilizer that I put on in the fall, and the nitrogen, and we're running around 240 units of N, Mike. I've got over 400 invested in a single acre of corn in fertilizer alone. Okay, that's not counting cover crop seed. That's not counting the seed that's there. You can kind of look at it however you want to, between $90 and $100 an acre in seed cost. You've got your burn down. The only thing really at this point in time I've got to go is a fungicide and insecticide aerial application and harvest. Okay, I'm going to guess that I've got, whenever I take into consideration machinery costs, land costs, Mike, I'm probably up in that $800 an acre vested at this point in time. Okay. Now, when I take a look at the prices that Sterling's mentioned, $8, $8.20. We're not there on December corn yet, but I look at those. That math works pretty good. If I have an average to above average crop, which it looks like I can make good money. When I take a look at my projected price on insurance in the 570s, and I look at an average crop, things don't look quite as good, assuming that I go and finish out the crop and I have $1,100 an acre in there. What I want everybody to be very careful of is there are ways to have opportunities to sell this crop without actually selling it. And what I did yesterday was, this is something Sterling and I have talked about on a few different social media occasions, is I bought a $7 December put option yesterday, Sterling, on corn. It's the right but not the obligation to sell $7 corn. I paid 46 cents for that option, so it gives me a floor of $6.54. The fee on the contract was 3 cents. That's $6.51. Now, where I'm at, I'm blessed with a great basis level down here. I know some of you are from Minnesota and Dakotas on here, but we're typically, if you can put this in the bin, I don't want to use the word guarantee. They get you in trouble every time, but we generally get 20 over. So that gives me a minimum price somewhere around $6.71, and I've got upside on this through about Thanksgiving. That's about whenever I've got upside. So if the market decides to rally, I benefit. I would definitely, it's tough as an agent to encourage a farmer to take marketing action. I get that. But I certainly would mention the possibilities of buying these put options. They're right, but not the obligation to sell the crop because of the amount of money that we're putting in here. And I think that with the inflation over the last 3 months, our estimate 3 months ago of what the costs were going to be on the farm to put that crop out, I think we're going to be up maybe as much as 10%. I mean, I never imagined diesel. When my wife calls to get the diesel tank filled up, she always tells the lady at the co-op, I hope this is the highest price that we ever have to pay. And she says, well, nobody says that. Nobody hopes they're buying the highest price diesel. And she goes, well, I've got to buy some in 2 months, so I'm hoping I pay less then. But I really don't want us to shut down our marketing efforts. I've seen this a few different times through my career where we just absolutely go into neutral. And while Sterling will tell you that he's not necessarily bearish the crop, you got the sentiment from him as well. He's not necessarily super bullish the crop either. And a decline in price by 60 cents to $1 still puts us at very good levels, but it could hurt us a little bit if we don't take action. So just a little bit of a real life example on marketing corn here. It's locking in a floor without locking in a price. And I know that's foreign to a lot of folks. If you've got questions on that, that's what we're here for at Marketing Info. We got a Marketing Info email. You're welcome to shoot Sterling or myself a text at any point in time. Sterling, really this last point is just something that something I feel like we need to watch. You mentioned spec funds in there, and very few times are large buyers or sellers. They're not the dentist in West Omaha. They're someone perhaps in Switzerland that's buying a basket or selling a basket of commodities. And it may so happen that corn and soybean oil are in that basket of commodities. Usually, those commodities include energy commodities as well. As I look at this, we look at an interest rate change. I saw this on one of the business networks this morning. They said, an interest rate change to curb inflation is kind of a general anesthetic. It's not very specific, and it can hurt a lot of people in the economy as well. You mentioned that. It looks like to me, in this environment, energy prices at some point in time, there will have to be some policies that specifically address energy policy. We saw yesterday, the president come out and he says more gas, less profit. And I think that's directed at your major energy producers like Exxon. We've seen their profits grow a little bit here over the last week. As a side note, I would encourage everybody to look at their assets in relationship to their profits, because it kind of puts things in perspective. When you've got a company with nearly $400 billion worth of assets, it doesn't make those billion-dollar profits look as big when you look at where they're at. But Sterling, I'm going to direct this to you. If we have specific action in the energy sector that revolves around producing more, and it comes in and it gives that knee-jerk reaction of energy prices lower, can that have effect? Will that have effect on corn, soybeans, and wheat? Pretty straightforward question.
It can. My problem with is, okay, let's say the Saudis agree to pump an additional 1 million barrels a day. The problem is right now our refineries are running at 92 to 94% capacity. The administration is attacking refining margins because they're making money refining energy. Guess what? You know why we haven't built a new refinery in years in this country? Because refining and making money are two things. Refining can be a real fine hedge against profitability. Refining margins can get very tight, and can get very squirrely, and even for the best traders, it can be hard to make money. So even if we put another 1 million barrels a day right at the economy, right there in front of it, we're not going to be able to turn it into juice you can actually use. Okay, we're not going to be able to turn it into diesel and gasoline any faster than we already are. So again, will it affect it? If we see a sharp downturn in energy prices, that can potentially affect corn, wheat, and soybean prices, but it does not have to. In our historical incidents, if you look back to the great run-up and the great collapse in 2008 and 2009 when energy prices went through the roof, they collapsed. By 2010, grain prices were right back, because grain prices will trade on their own fundamentals. They are not the same thing. So yes, you could lose some ethanol demand. Yes, you could lose some soybean oil demand, etc. But when you see the low prices go down, people drive more. Right now, we're probably doing more to make people more efficient drivers than anything else out of this, because people are like, well, don't waste gas. And, my pet peeve is the guy who drag races up to the next stop, red light. It's amazing around here that you're going to get stopped by this red light, but yet you insist on going 60 miles an hour to it. Just amazing. But that can happen, but it's certainly not a guarantee. If we were to see a drought whatever that could certainly keep those prices pushed up. And in this case, lower energy prices might be able to goose your demand at the grocery store. You know, when you don't have to spend $50 at the gas pump, but you only spend $30, there's $20 then. You know, that.
We see a big drop in domestic feed numbers, which would be indicative of problems at the grocery store. But we've talked about this a little bit over the last 30 days. It's happening right now. It's probably happening more at the restaurant, fast food stores than it is maybe at the meat counter. Like we talked about, you know, comparing the price of a value meal at McDonald's for a chicken sandwich versus going and buying a steak. But we're seeing this behind the scenes. It's kind of invisible, but domestic meat consumption has to be coming down a little bit here behind the scenes. Would you agree with that?
I think domestic meat consumption is experiencing some adjustment within the market, meaning if you're eating beef and all you eat is beef and that's all you want, you're still eating it and you're paying for it and something else is coming out of the budget. But if you have to adjust the budget, we're going to see more pork, more chicken, and that demand will disseminate from beef and spread across the other two. One thing, this heat that Mike was talking about that we're having out here is no bueno for the cattle. That is no good at all. And, you know, we saw a couple thousand head get killed in Kansas over the last few days due to the heat. This is going to force animals to not put weight on well in this heat. So if you're kind of at the point, well, I'm still making money on this cow. Well, I'm not making money. Well, when you don't make money on the cow, away she goes in a big, big hurry. So that will bring lighter animals into the market where this heat goes from being a 1 to 2 week phenomena to, let's say we're still talking about this heat in July when we have this meeting, you know, a month from now. That's going to definitely affect meat supplies down the road. We'll see prices come down, and then there will be your next round of food inflation, you know, at the meat counter.
Okay, Mike, wait, I'm going to say something real quick. I shop for my family food. All of our grocery is way up, and one price that I have not seen go down at all, well, there's two I'm going to tell you, because you told me bacon would go down, and it has not. So I'm calling you on that, Sterling. Bacon has not gone down, and you said it would. And chicken has not gone down. It is still almost triple what I used to pay for it. Triple.
Okay. So the good news is, guess what? Somebody's making money on your bacon, because the actual price of the bellies has been volatile, but it has dropped from $1.80 to about $1.40. So it dropped 40 cents a pound in the very biggest picture. Now, when you have all this price variability and you have volatility, guess what? Well, I got the bacon cheaper. Yeah, well, I can mark the bacon down and mark the steaks up, or I can just kind of leave everything where it is and not upset the apple cart. And that's kind of, I think, what they're doing. Because I've noticed bacon prices haven't changed too much here. I've noticed the price of prime steaks has moved up a little bit. But my butcher's keeping the regular stuff that I buy has been about the same so far. But remember, this is also, I'm in Omaha. We have the shortest supply chains for everything in the country. Everything that I put in that grocery cart is probably made within 500 miles of here. So.
Lots of stuff to think about in this month's marketing meeting today. Good stuff on the weather. Mike, it's spot on, and I appreciate having you on here as a voice of reason, because a lot of times we hit the panic button a little bit early. I think you kind of gave everybody a reason to take a deep breath and watch this thing. I will say, you know, our forecast has gotten a little bit better over the last 48 hours, a little bit more promising down here. Our 101 and 102s didn't come to fruition this past week. Don't get me wrong, it was hot, 98, 99. We had that humidity in the mornings that was really important the last 24 hours. So great synopsis on weather. Sterling, I wish you had better news in the equities market. Chris, you to task on these meat prices. She's ready to fill up the freezer with this cheaper stuff over the next month. So you get a reprieve. You get 4 weeks some cheaper bacon out there and get that.
Well, I can watch my bacon prices. It could very well get cheaper here again because, they're making that bacon across town. So I don't have all that diesel fuel in here moving that bacon that you have. I mean, I went into our World Market store and they had Spam, and I'm like, ooh, Spam imported all the way from Fremont, Nebraska. Oh boy. So again, that affects things. If you're further off the beaten path, you have to move this stuff, and what little bit you get back in the price, well, yeah, but we have to haul it 500 miles or further. So
exactly.
And lastly, the comments that I made over shutting down on marketing, if we weren't this much higher than that projected price in the spring, it's something I think people have to look at. I'm going to throw there's some private products out there that we may want to pay attention to next year. Too late this year, but some folks that use some private products that allow some of this pricing to be collected in June, July are something that you need to talk to your agent about here. Maybe ask questions now to understand what you're going to purchase next year, but don't shut down this thing. This is a great opportunity, and lots of things to cover and lots of things to think about. We've gone an hour, a little over an hour. We've had great participation over that time. Love the and if you've got any follow-up questions, don't hesitate to shoot them to us.
And one other thing that I'd like to bring up, the marketing call will be ending on the 30th of June. Okay?
Right.
So anybody who's on that needs to get switched over to the podcast. The benefits of the podcast are, one, it doesn't fill up your voicemail. Two, it's much clearer and easier to hear, and I don't have a time restraint that I have with that marketing call. That marketing call I have to get done inside 2 minutes and 20 seconds, or it gets cut off and there's voicemail issues with it. You can also listen to this any time of day, and the upside of the podcast, you don't get just one. You get 2 full market updates, one in the morning and one in the afternoon, and you also get a livestock update. It's easier to use. If you have any trouble, we can talk you through how to use it. But if you have a computer or a smartphone, it's easier to use than your voicemail, probably.
Absolutely. Please subscribe to our podcast. They are so wonderful. It's just clear and crisp, and you can listen to it anytime. It's just wonderful. And the information there's just so much more. It really is just wonderful. And yes, we did have a question. This has been recorded, and this webinar will be posted on our YouTube channel, and it will also be, the link will be on our next, or hopefully on our next, or on tomorrow's Daily Market Outlook email. So be watching for that to be posted there. We want to remind you that we have a special report that is going to be on June 30th. At 10:45, we'll go live, and we will be talking about the report that the USDA is going to be releasing at 11 o'clock Central Time, so noon Eastern Time. Sterling, do you want to talk a little bit about what to expect on that call?
This is the June acreage report, and this is going to be one of the most closely watched items for an acreage report ever. With currently, the idea is that we're going to have all these extra soybean acres from the March report. Did that really happen? Did it turn into corn? Did we have wheat acres up north magically turn into soybean acres? This is going to be something, because this drives the main part of the balance sheet. The 2 biggest components of the balance sheet are acres planted and how much we harvest off those acres, and the yield. So if we see a change in this is going to change the balance sheets. These markets, I'm willing to think that, assuming the heat continues for the next 2 weeks, which I don't really see us getting a free ride on that, we're going to have markets that are going to be really sensitive. I mean, they're sensitive now, but they are going to be hypersensitive, where if we see, we didn't get quite as many corn acres, look out. You shave a little bit of corn acre and you shave a little bit of yield, that balance sheet goes from, well, we're okay, kind of, sort of, at these prices, to where we shave a couple 100 million bushels, we go to not okay in a hurry. So there's going to be that's going to be a closely watched report.
Right. And we will have Mike joining us on that call. Mike doesn't always join us on those quarterly reports, but because this one is so important and it has so much to do with acreage and especially the weather and how that's going to affect that. And these soybeans being planted, some of that has to do with that double cropping. Wouldn't that be correct?
Yeah. Again, this year, given where prices are, kind of have to think, some people got to be specking some double crop stuff in here. If you have the capability. Right now, you've got, right now we have new crop soybeans, $15.35 a bushel. Those are about as tasty in new crop prices as there ever has been. So if you have a chance to double crop things, for me, I could do it. I've got a little extra diesel. Hey, why not throw the dice a little bit? So
there you go. So make sure you join us for that report. The link has been put in the chat box, so make sure you see that. And then if you're not seeing it there, if you have any issues, make sure you email us at marketinginfo@sompointernational.com. We'll be sure to get you registered for that or get you the link so you can register for that. And I also want to remind you that we have our virtual crop tour going on, and we would love for you to participate with that. It's just telling the story about what's going on with Plant 2022. It's really been fantastic for us this year. We have had crops from 23 different states this year and just so many different crops. It's been wonderful. Mike has provided some great information. Sterling's been talking about it on his podcast, so make sure that you're tuning into that. We have had some wonderful information every week. We have a survey that we would love for you to take part in as well. I have included that link to the website or to our webpage. That is a part of the AgriSompo website. So make sure you tune into that. You can link to everything. You can see past reports. You can go right to our survey. You can also go to that podcast as well. So very, very good stuff right there. I think that's pretty much all I've got for you today. I'm not sure if there's anything else, Sterling or Mike. I think Brooks went ahead and jumped off. He probably had a phone call. But if you guys don't have any parting words, I'll go ahead and finish us off.
Okay, thanks, Christy.
Thank you, guys. Thank you all for joining us today. We sure appreciate you being with us. And make sure you let us know if there's anything we can help you with. Have a great day.